Good day, AVZ traders. I trust you are well. Welcome to broadcast number 85. Now, I've produced two videos. This is the second video, just looking at slightly different structures that created for us strategy number 2 out of two currencies, pound USD, which is one that we're looking at here, and euro versus USD. So go back to video 84 and look at the euro versus USD, euro USD, and this is pound USD. I just want you to really pay attention to the different structures that we have. The low of yesterday, lower AVZ, and of course, that, as you would know, is our midpoint. That's the midpoint of yesterday. And of course, then we have measured move breakout of the range of yesterday right here. Okay, I described these things a little bit more in the earlier video, so I want to try and keep this one a little bit shorter for you, but use both in terms of your studies. So bulls had an opportunity in the lower AVZ to buy, but they failed to do much with it. Revaluation by the bears trying to push for lower prices. We got to the test of the 10 EMA. We didn't get a decent enough breakout for us to jump into at this particular point. And then we had this test, which was a bear law test. Usually, if you have a strong breakout, let's say this candle here had occurred here. If you had that, and then you had a bear law test candle, not closing beneath the EMA, that would be decent enough for us to take. It's a test of the EMA, it's not closing beneath the EMA, but that's a bear candle after a weak breakout. Just leave it, let it go. And now it's too late for us to do anything else. Is this a valid enough strategy number 2? Guys, recall, I say high probability is if the signal does not break above the previous candle and become an outside candle, which this became, because now you're trading a breakout. So you want to do that. So this essentially revaluation by the bears, revaluation by the bears, revaluation, bears refusing the bulls the opportunity to accelerate up any higher. We're still in the lower AVZ, still beneath the AVZ of indecision. So it is still in a buy zone until the bears break out beneath the low of yesterday. On the first candle, we tried the tail. Remember, I said we reset the count. This is the second bear breakout. Does it become a large breakout? Well, the tail is a problem, and we're still just here at the low of today. So best to wait. And then you have an inside candle, you have bears that attempt to break out beneath again. The market is below the low of yesterday. Then we get this test of the low of yesterday. Test of the average price is a confluence of key levels. The low of yesterday is a key level. The average price is a key level. Now, that is a valid enough test for strategy number 2, because all you're going to do is just look to the left. We had 3 bear breakout trend candles, one of them breaking out beneath the low of yesterday. Did not give us sufficient reason to trade strategy number 1. First breakout that becomes a large breakout, but the market is going down and beneath the low of yesterday. We have a pristine high test candle. This is beautiful enough for us to take as a trade. If you want to take that measured move above here, you would look to the left. That's a key level to put your stop. 3 bear breakout trend candles, or even there at that level, or even higher, depending on your risk level. Pretty close to the low of yesterday. 1 breakout trend candle didn't give us a first breakout, which becomes a large breakout trend candle. I wouldn't just put a measured move stop. I would probably, that's valid, but I would use one a little bit higher, just to be a little bit more cautious with my capital, but there is nothing wrong with that if that's what you're comfortable with. So you could take that, and then you need to hold and see how far you go. Now, please bear in mind where we're at. This is before London opens. London opens here. London opened here. There was open of London. An hour before that, this is pound USD. An hour before that, Germany is open, the DAX is open. So that's that's the open of Germany. But in terms of London, this being pound USD, the index that opens relevant to it, the exchange that opens relevant to pound USD is here. So all of this is taking place before that, which is absolutely fantastic, right? Remember, we said you can trade at any time. And if you're doing that, you say, well, I wonder if the bears are strong enough to get to the measured move breakout range of yesterday. And that's what we got here at the open of London Exchange. Decent enough bear candle, but you're right there. You're not going to trade that under any circumstance, even if it had been a beautiful enough test of the average price, because you don't have one times risk reward. But this here is not a surprise. Why is it not a surprise? Because now we know how to look out for this hidden level of support, the measured move, breakout range of yesterday. We would know how to do that. But this beautiful bear trend candle took place all the way, in late Asian session into the open of the European markets, into the open of London. So you would have taken that. Now, if you hadn't taken that, and you said, okay, I see that breakout's not strong enough. I see that, not happy enough. Let me wait to see if I get follow through. Now you could consider that as a sideways test of the 10 EMA, and you wait for a follow through beneath that, level. You probably wait, and then you get that. These are all follow through candles, but you can see, man, I'm way beyond where I should have jumped in. Do I do that or don't I jump in and still take it as strategy number one? I would not, as strategy number two. I would not be doing that anymore. If I miss that, and if I didn't jump in there, nothing gives me a reason to jump in. Had this candle been like that with no tail beneath it, I could use that as a follow through on the rationale or the logic. If I had not taken that and say to myself, well, I have sideways price action, a test of the average prices. If that didn't have a tail beneath it, that's probably the last one that I would consider taking as a strategy number two. Otherwise, you wait, then you just have to miss out all of this. We see that big breakout trend candle. It's a bit late to jump in. You'd have to wait for a test of average prices. You could consider that a test of average prices, but we are now really trying to manage things very tightly, and I would let that go. Okay, still a dodge, still an effective test. We come into the measured move breakout range of yesterday. We come into the open of London. If you've missed it up there and the follow through, just let it go. All right, guys, my main point was to show you different options. If you look at the previous video and this one, to see what structures you could get trading strategy number two beneath the low of yesterday. Of course, the inverse would be the same if this was taking place above the high of yesterday. All right, traders, take care, and we shall catch up again. This is Dr. George. This is broadcast number 85.